So at this point, Aron just hates us, or he's got the worst timing ever, because AMC just came out with a capital raise today, and today was not the best day to do that. That is causing AMC to drop about 15%. But what is actually interesting about this is you're actually seeing the cost to borrow rates going much higher today. You're talking in the hundreds of percents. Even the interactive brokers, the live cost to borrow rate is 51%. The cost to borrow max is 305%. Cost to borrow average of 234.4%. So I think this is very interesting. But by and large, it's a pretty red day for AMC. It's a pretty red day for the markets as well, guys. So stay tuned. We're going to get into everything you need to know about AMC and the markets. The only thing that I ask you to do is hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you for watching. Now let's get into it. So first things first, let's talk about the situation with AMC. So this article says AMC plunges after theater company announces capital raise, proposes reverse stock split. I don't know if they wanted to do the whole reverse stock split because they thought it would offset the capital raise, or if people would like it. I don't know. That's not going to be the case. Anytime you're going to raise money in this market, your stock is going to drop a lot, right? Now, it says AMC Entertainment stock fell swiftly on Thursday after the company announced a $110 million capital raise. The company said the move would reduce its debt load. It also proposed a reverse stock split, which will require shareholder approval. Now, you could raise all the money you want, you know, $110 million, and the stock's down 15%. We got a lot of debt, right? If you're trying to pay off the debt with these capital raises, dude, the stock's screwed at that point, right? I obviously don't think that is the case, but I definitely don't think now is the time or the place to be raising capital. You don't see any other companies that I know of coming out and raising capital. So I do think this is a poor business judgment, a poor executive judgment on Aron's part, and I'm going to see it for how it is. This is obviously not a very smart thing to do right now. You could have waited even until the markets were a little bit in a better kind of footing, right, or kind of positioning. Not when the markets are down 2-3%. Not the day to do it. Your stock's going to get destroyed, and you're going to have to issue even more shares to make it to that $110 million threshold that they obviously want to get to. Now, why are the markets down so much to begin with? Well, it's interesting. So it says Dow falls over 650 points after strong economic data, bearish comments by David Tepper. It says U.S. stocks were sharply lower in midday trade Thursday, more than erasing their gains from the biggest rally in 3 weeks after a round of upbeat economic data and a warning from hedge fund titan David Tepper that he was leaning short against both stocks and bonds on expectations that the Federal Reserve and other central banks will continue tightening into 2023. Positive economic news can be a negative stocks by underlying expectations that monetary policy makers will remain aggressive in their efforts to squash inflation. So let's go ahead and take a look at the data. That's going to be the biggest thing, right? David Tepper, yeah, he's a big name in the space, but let's be real, guys. The markets already expect the markets to go down in 2023. You should see these big banks price. No. We're not doing that. You should see the big banks price targets for the S&P. It is much lower. It's not like this is new information if you say you're leaning short, right? Okay, economic data. Investors saw another raft of economic data Thursday morning, including a revised reading on third quarter gross domestic product, which showed the U.S. economy expanded more quickly than previously believed. Growth was revised up to 3.2% from 2.9% from the previous update released last month. The number of Americans who applied for unemployment benefits in the week before Christmas rose slightly to 216,000, but new filings remained low and signaled the labor market is still quite strong. Economists polled by the Wall Street Journal had forecast new claims would total 220,000 in the 7 days ending December 17th. Jobless claims ticking slowly up but coming in below expectations could be a sign that the Fed's wish of slowing the labor market will have to wait until 2023, said Mike Lowenhart, head of model portfolio construction at Morgan Stanley Global Investment Office, in emailed comments. Quote, "It's no surprise to see the market take a breather today after yesterday's rally as investors parse through earnings data, and despite some beats this week, expectations that earnings will remain as resilient in 2023 may be overblown," he wrote. So, not good, not good. And then you have David Tepper coming out and saying that he's leaning short on bonds and on stocks. So all in all, I don't really think this is like a huge day. We're not getting any bombshell economic data. It's just not slowing down as fast as people would have expected. S&P down almost 3%. The NASDAQ is down over 3%. And the Dow is down about 2%. So overall, a very weak day. And I think that'll make tomorrow even that much more interesting. Now let's take a look at the Ortex data behind AMC, because I mean, it's wild, to be honest with you. I can't remember ever the stock dropping 15% and the cost of bar rates shooting up hundreds of percent, and these are like real numbers, guys. It's not a spike. This is the number. So the live short interest of free float sitting at 19.31%, up 0.03% on the day. You now have almost 100 million shares that are sold short, up 29,000 on the day. Cost of bar average 234.4 thousand. Cost of bar max of 305,000, or 305%. Cost of bar minimum of 45.75%. And you are seeing the interactive brokers live cost of bar rates at about 51%. On top of all of that, you are seeing a lot of put activity and some call activity heading into AMC stock, and the dollar amount is a lot higher here today. You have seen 116 orders totaling $10.37 million, positive order value of 6%. So it's not that positive, and there is a lot of money flowing into options. People are betting that AMC will fall. And if you guys watched the last videos, I was pretty bullish on the rest of this week for AMC, and clearly you never know what's going to happen with management. So I'm a lot bit disappointed in how they chose to execute this. They could have done this in a much better way at a much better time, and they simply chose not to. So very disappointing. Now, if we look at the Stonko tracker data, not sure how much it's going to matter. To be honest, tomorrow could be a big day still. If that economic data does come in better than expected, it could send the whole markets up. And you have personal income month over month, personal spending month over month, and durable goods orders month over month. All of that for the month of November. And the PCE price index year over year. These come out at 9:30 in the morning. So you're probably going to either get a continuation of today, tomorrow, or you could see a fat bounce tomorrow if these data points do show improvement. And, you know, the consumer's been so good and so resilient. The first three right here, I don't know about. PCE, that one could come in lighter, and that would be positive. But if people are still just spending like crazy, durable goods orders are good, well, that might offset a good PCE report. Let's get a quick look at AMC's technicals, and then we will go ahead and wrap up this video, guys. So AMC did hit a low of $4.11. You have retraced quite a bit back to the upside, so that is the number one positive thing I could say about all of this. You're not, it doesn't look like going to close at the lows of the day. It's even possible, if the markets do want to rebound a little bit, that AMC could also rebound quite a bit in the grand scope of things. AMC hit its low a while ago and has been coming up ever since, whereas the markets pretty much keep hitting a new low throughout the whole entire day today. So I do think that is a positive divergence going on from AMC to the broad markets. Now, the major level we got to break if we do get this upside retracement move is going to be around $5.05. That is the intraday low set back here on November 9th, where we found support last time and where we were just at over the last couple of days. If we can get up to that level, we can hold that level or break out a little bit. That would be positive. Don't necessarily expect that to happen today, but if we do get good economic data possibly coming tomorrow, that is definitely on the table. Volume for the day sitting at about 45 million. You still have about 2 hours left of trading, so definitely going to be a little bit of a higher volume day than we are typically used to, guys. And it did look like we formed the triple bottom, and that's what's so irritating about it. Just when you start to look like, hey, maybe we might get a little bit of a comeback, you get this news coming out from Aron. It's just like, dude, what are you doing? And let's go ahead and pull up some different indicators, pull up the MACD and the RSI. If we pull up the RSI, trading at about 30.37 on this lower end range, meaning you are severely oversold. And the same thing is true with the MACD. You're also in severely oversold territory with like 20 straight red days, and this is basically the trend of momentum, right? Not too good. But typically, like I've said many times, if you have bought AMC at the lows of 2022, you have been rewarded no matter what the reason was for it. So I don't think that trend ultimately changes now, but it's going to make things a little bit more interesting because $110 million is not a lot for the stock to be dropping 15%, and it's obviously due to hedge funds taking on those short positions. And you guys see the Ortex data. I mean, it's not looking pretty for shorts as well when the cost of borrow rates go to 300% and 200%. That's not a good thing. It's not like we're being flooded with shares available to be traded. There's 0, 1,000, 4,000, 3,000, 5,000, 500, 0, 7,000, 0, 3,100 shares, 0, 9,000, 8,000, 9,000, 10,000, 0, 1,000, 2. You guys get the idea. Every hour there's only a couple thousand shares that are willing to be lent out. That puts a lot of pressure on those hedge funds, guys. So that is going to be it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.